Assalamualaikum warahmatullahi wabarakatuh. Hello everyone. First of all, let me introduce myself. My name is Eka Susanti with NPM 2241106 from Management Class 22. Here I will explain the material regarding definition of NPWP, registration for NPWP, the definition of taxpayer subject and taxpayer object, definition of NPWP. The NPWP or tax identification number is an identification number assigned to taxpayers, enabling them to fulfill their tax obligations in Indonesia. Each taxpayer, whether individual or corporate, is given a unique NPWP that serves as their identification within the taxation system. The NPWP facilitates various tax-related interactions between the taxpayer and the tax authorities, known as the Directorate General of Taxes DGT, a department within the Ministry of Finance of Indonesia. The functions of NPWP include acting as an identification tool for taxpayers, serving as a correspondence medium between the tax authority and taxpayers, facilitating tax payments, where the NPWP is required for documents such as import tax statements and tax deposit forms, SSP or e-billing, assisting in tax monitoring and compliance, especially in calculating and reporting income and value-added taxes. Eligibility for NPWP. An individual or entity becomes eligible for an NPWP when they meet subjective and objective requirements under Indonesia's tax laws. Subjective requirements involves the individual or entity's classification as a taxpayer under the income tax law. Objective requirements involves the individual or entity receiving income or conducting activities that subject them to taxation under the income tax law. Registration for NPWP. Electronic registration of NPWP. The DGT also provides an online registration option via their electronic registration system at eg.pajak.go.id. Taxpayers only need to enter their personal data, and the system will validate it using their ID card and family card number for verification purposes. This online approach simplifies the registration process, making it accessible nationwide. Tax obligations and penalties. Taxpayers who meet both subjective and objective requirements but fail to register for an NPWP may be assigned one administratively by the DGT. Failing to obtain an NPWP can lead to penalties under Indonesian tax law. And once assigned, tax obligations apply retrospectively for up to 5 years from the date of issuance. Issuance of NPWP by office. If a taxpayer is determined to be eligible for an NPWP based on the DGT's findings, but fails to self-register, the DGT may issue an NPWP by office. This means the NPWP will be automatically registered, and the taxpayer will be liable for tax obligations as if they had voluntarily registered. Purpose of NPWP registration. The NPWP is crucial for various functions within the Indonesian tax system. It is not only used for tax calculation, but is also a vital tool for the government to monitor tax compliance and ensure that taxpayers adhere to their obligations efficiently. Furthermore, by keeping a record of taxpayers through NPWPs, the DGT can more effectively enforce tax collection across individuals and businesses operating within Indonesia. Deactivation and removal of NPWP. An NPWP can be removed upon request, but only under specific circumstances, such as the individual has passed away and left no inheritance, the business has closed or merged, the taxpayer has permanently left Indonesia, taxpayers have fully settled all tax dues, or if collection of outstanding dues is deemed uncollectible. Application process for NPWP deactivation. To deactivate an NPWP, taxpayers must apply to the DGT office, who will review the request and complete the deactivation within -1 month for individuals or 12 months for corporations. This process ensures the closure of tax accounts only for inactive or dissolved entities. The definition of taxpayer subject and taxpayer object. Taxpayer subjects. An individual subject to tax in Indonesia typically either resides in Indonesia for more than 183 days within a 12-month period or demonstrates intent to establish residency. This includes individuals whose primary economic and personal interests are centered in Indonesia. Entity A. Entities such as corporations, limited liability companies, partnerships, and cooperatives operating within Indonesia are classified as taxpayer subjects. They are subject to tax on worldwide income if established in Indonesia, or on Indonesian-sourced income if foreign. Undivided estate as a taxpat. An undivided estate, representing assets left by a deceased individual that have yet to be distributed, is considered a taxpayer subject. It is taxed as a separate entity until distribution to the rightful heirs. Taxpayer object. Definition of taxpayer object. Object pajak primarily consists of income derived from various sources that increase the taxpayer's economic capacity. This includes income generated from activities within Indonesia or globally for resident taxpayers. Income as a primary tax object. Income as defined under Indonesian taxpayer object. It encompasses any increase in economic capacity, whether derived from employment, business operations, investments, or other financial gains. Types of income recognized as tax objects. Taxable income includes wages, business investment returns, royalties, and other revenue streams. For instance, income from work relationships, independent services, and self-employment falls under this category. Additionally, investment income such as dividends, interest, and rental income is taxable. That's all my explanation. Thank you and wassalamualaikum warahmatullahi wabarakatuh.